Okay.
Nick Gay, I'm the member for Market Ward in Cambridge and Vice Chair.
So welcome everybody to this meeting of the Audit and Accounts Committee. I have some things to read out. I'd like to begin by welcoming both committee members and those members of the public and press who have joined us today for this Audit and Accounts Committee at Newshire Hall. The County Council allows filming and photography at its public meetings, so please feel free to take pictures and tweet during the meeting. Can I ask, though, that everyone present turns their mobile phones to silent or vibrate whilst the meeting is taking place. Please be aware that this meeting is being live streamed and that a recording of the meeting will be available to view on the County Council's website. There is no fire alarm test scheduled for today, so if the fire alarm sounds, please leave by the nearest marked fire exit at the back or the sides and assemble in the car park. Okay, so if we move on to the agenda, the first item, apologies and declarations of interest. Dawn, do we have any apologies?
Apologies from Councillor Whelan. We have Councillor Henry Batchelor substituting.
Thank you, Henry. And does any member wish to declare any disclosable pecuniary interest or non-statutory disclosable interest? Thank you very much. Next item is petitions and public questions. We have received no petitions or public questions. And so the next item 3, the public minutes of the committee meeting held on the 25th November 2021. We're being asked to approve the minutes of the meeting on the 25th of November as an accurate record. If any committee member wants to raise a question on the accuracy of the minutes only, can they do so now, please?
Not a question of accuracy, but as I wasn't here, I should probably abstain from approving these.
Very well, thank you. But
ill at that last meeting, so I was absent.
And you weren't here either, Mac. Okay, well, for the rest of us, I see no objections. In fact, there aren't many members left who are. But I see no objections, so we're unanimously. Now we go on to the action log, and an updated action log was included in the published paper for this meeting. Are there any updates or questions on this, or can we take it as noted? I've got two minor comments. One was I took the two papers that came from here last time. The first one about...
You okay? Looking a bit
It's a bit cold.
Let's just wait for Dawn to sort out that. So the first one, I took the paper about the appointment of the external auditor using PSAA, the public sector audit appointments, to full council, and that was approved. And also full council noted the internal audit annual report for 2020-21. So if we can just include that, but apart from that, everything is as per the action log. So we now go on to the statement of accounts. This is a report on the statement of accounts, and can I ask Tom Kelly as Chief Finance Officer to introduce this item? Thank you.
Chair, thank you. So we're pleased to report good progress with the external audit and reproduction of the accounts. I'm just going to ask Stephen Howarth to introduce the report for the finance team, and Eleanor Todd is here as well for questions. And then I think Mark from EY will talk us through the results report in more detail.
Thanks, Tom and Chair. Yeah, so these are the committee considered the draft accounts at its July meeting ahead of the commencement of the external audit. We are now reaching the end of that external audit process, and the results of that are before you. I will just speak briefly about, just to make sure absolute clarity on the authorship of the various documents that the committee has got on this item. So the covering report and the appendix on city deal treatment, and obviously the statement of accounts are produced by the council, and then EY Mark will have produced, and we'll speak to the audit results report in a second, hopefully, after I've introduced the Cambridgeshire element of that. The covering report sets out the status of the audit, which is pretty far progressed now, although not yet fully concluded. Section 2.2 of the report sets out which elements of that of the audit were still outstanding at the report publication date, although some of those will have moved forward a bit since then. But we do feel that it is sufficiently far progressed to recommend in recommendation D, I think, or recommendation 4, that the committee delegates to the chairman and to the chief finance officer to sign the final accounts as they are produced. The audit progressed relatively smoothly over the late autumn and winter, especially in light of the risk around the pandemic in terms of the potential effects on staff time. And it's clear that progress was made in several key areas during this audit based on experience in previous years. The only material item outstanding is around the city deal grant, as the committee will be aware, and Appendix A is a slightly more detailed technical note that we've produced to set out the council's approach in accounting for that grant, but it does remain under review by the auditor, and they are yet to conclude on it, I think. Section 2.5 of the report sets out what other adjustments have been made in between the sort of the core financial statements between the draft accounts and these updated ones. And Section 2.6 sets out where there are other adjustments that have been potential adjustments that have been identified that we are not recommending that are made, and there is a recommendation around sort of agreeing those two there. So that's it by way of introduction to the audit for 2021's accounts. The report does have a section just covering the heading into 21-22's account production in terms of timescales, which are broadly unchanged from this year, but also some updates on improvements that the government is trying to make to local audit due to the relatively high number of delays that the sector has faced in auditing the 2021 accounts, and also updates on next stages to get through the 18-19 value for money report now that the former audit has concluded in respect of 17-18. But I will hand over to Mark there if that's best, and then questions after.
Thank you, and good morning. And I would concur with the comments that Stephen's made about the progress of the audit, but our role is to take you through the assurances that we've got against the audit risks, so you can go through your determination and recommendation process as a committee. So I will talk you through our report and our key findings and assurances that you can take as a committee. But firstly, to note that this is a provisional audit results report. Provisional because we clearly haven't concluded on all our procedures, and we may therefore need to update the results as a consequence of concluding those procedures, and we would issue a full and final audit results report at that time. We have encountered some element of sickness in the team, and clearly the city deal accounting considerations are detailed, so we are not fully complete as of today and as of the details within the report. But I think the report does provide you with considerable assurance at this stage over key audit areas and audit risk areas, and I will take you through those and indeed update you on any further assurances that we have now completed since the publication of our report. But just to walk you through it in the different sections, and then I'm happy to take questions at the end. So just to remind you that on page 5 of our report, in terms of materiality, our materiality level set for this audit is 18.68 million based on gross expenditure, and we are reporting audit differences above £935,000 to you. In terms of the outstanding areas of the audit on page 6, we have now concluded a couple of those areas, and I will take you through those as I go. But we have concluded on capital financing requirement and minimum revenue provision, and the capital adjustment account, and the group statements and notes. And I will provide you with an update on the property, plant and equipment and going concern as I go through the detail. The remaining bullet points are in our to-do list between now and conclusion. In terms of audit differences on page 8 of our report, there are currently 2 uncorrected audit differences, one in relation to property, plant and equipment at 2.169 million, and one in relation to an insurance provision at £967,000. Clearly, we would need this committee to concur with management's view of not adjusting for those, and that would go forward into the letter of representation. We have 3 corrected audit differences set out on page 8, and there is further detail on section 4. None of those differences that have been corrected are material, but are above our reporting threshold and clearly set out for full disclosure for you. And I think the narrative that's in the officer's cover report provides the detail of how they came about, but I'm happy to go into further detail through questions. In terms of audit risks and audit assurances on page 9 of our paper, I think I can provide you with an update and take you through each of those, and you'll get a flavour of the level of assurance that you can take from our report today. So in terms of our first overall fraud risk on management override, we've completed all of our procedures and we have no matters to bring to your attention or no indications of management override of controls. In terms of the second fraud risk of inappropriate capitalisation of revenue expenditure, again, we've completed all of our work and we have no matters to bring to your attention. And then the third fraud risk in relation to accounting adjustments through the movement in reserve statement, we have now completed all of our procedures in relation to that, and there are no audit differences to bring to your attention. Our first significant risk was accounting for grants, and these are twofold. One was around COVID-19 related grant funding, and the second one that we have split out is the City Deal grant funding. We have completed all our procedures for COVID related grants, and there are no matters to report apart from one disclosure item. But as Stephen has said, we have not concluded our work and judgments around the accounting for the City Deal grant, and I will go into further detail in a moment. In relation to our second significant risk on the valuation of land and buildings and investment properties, we've completed the majority of our audit work, but our procedures in relation to depreciated replacement cost assets is yet to be concluded. And again, I'll go into a little bit more detail in a moment, but all other elements of property, plant and equipment valuation have been completed with no matters to bring to your attention, with the exception of the 2.169 million unadjusted difference. Then in terms of accounting for schools to academy status, private finance initiative and pension evaluations and disclosures, we have completed our work for all of those and have no matters to bring to your attention. Then group consolidation, we have now completed our work in this area. There are a number of minor adjustments to be made to the revised set of accounts because the council's accounts were prepared using this land's pre-audit set of accounts, and through the audit process of this land, there have been a number of adjustments to both the comprehensive income and expenditure statement, balance sheet, and the cash flow statement, amounting to 3.6 million for the comprehensive income and expenditure statement and balance sheet, but with no overall impact on the balance sheet. It nets to zero, and 6.7 million on the cash flow statement. And I think Stephen can probably give you an update of where the amendments are in relation to those. We have agreed those changes through, so that is now complete. So in terms of risk, our risk map and all our risks, I think we can give you significant assurance against all of those. That City deal is remaining outstanding, and then the one remaining procedure around depreciated replacement cost assets, which I will go on to now. So as I said, the City deal, we received the updated accounting treatment and rationale for the council's approach on the 9th of February, and this did include the council's use of experts to inform their judgment. We are currently in the process of considering this paper and consulting internally with our financial reporting group to determine whether the current accounting treatment is correct for the fact pattern available to us. Further considerations are therefore necessary for us to conclude on our view, but there are in essence two possible outcomes from that review. One, the current accounting treatment is correct and full recognition criteria have been met. The second option being that the conditions requirements for full recognition have not been met, and therefore all of the income should not be recognised in year one. So that's an either or outcome at the end of that. In terms of property, plant and equipment, I would conclude that it's been a much better year in terms of the level and quantum of matters that we are reporting to this committee, which I think reflects the hard work that the finance team have gone through, and indeed the liaison with the council's external valuers, Bruton Knowles. And we have gained the assurances that are set out in our report, with the exception of depreciated replacement cost assets. We have one assumption remaining outstanding, which is in relation to the obsolescence factor for those assets. And that obsolescence factor is driven by the useful economic life policy of the council, and we have not yet seen that policy, so we can't match the two together to make sure that the obsolescence factors applied to those depreciated replacement cost assets is indeed correct. So that is the only remaining outstanding procedure for that. So putting that to one side, we only have one unadjusted audit difference in relation to property, plant and equipment of 2.169 million, which in essence is a timing difference between the report date of the valuations and the date of the draft accounts. And clearly at 2.169 million, that is not material to our overall audit. And given that we had over 300 million of property, plant and equipment adjustments in last year's set of accounts, I think you can see the considerable progress that the council's finance team have made with the valuers in getting to the draft financial statements. So in terms of group update, as I said, the council's draft accounts were based on this land's draft accounts, and clearly the audit of this land has now concluded, and there were some audit differences that this land put through. Those differences do need to now cascade into the council's group accounts, and it does have the impact of 3.6 million on the comprehensive income and expenditure statement, 3.6 million at a gross level on the balance sheet, although it has no overall impact. It goes through both inventory and reserves and nets to nil, and then 6.7 million on the cash flow statement. In terms of going concern, we have received management's assessment and we are in the process of auditing it. We need to do some top-up procedures because this land's going concern period has now kind of, the 12 months is now shorter than when we would need 12 months at the group level. So we need to do the intervening top-up period, which is a procedure that is underway. So as of today, and our assurances that we have set out an unqualified audit report in section 3 of our paper. Clearly, the ultimate outcome will depend on the results of the City deal considerations, which I have set out, and then we will discuss with Tom and Stephen when we have concluded our processes. If full recognition is not correct, we would clearly be seeking an audit adjustment to be made. Otherwise, we'd have to consider the impact on our audit report. Section 4 has the full details of the audit differences that I've spoken to, and indeed Stephen has in the cover paper that you have seen. And I think the level of audit differences there, both adjusted and unadjusted, both in total number and the value of them, are both relatively limited considering the size of the audit and therefore the committee should take assurance from that and the processes that we have gone through as an audit team. On page 38 of our report, in relation to the control environment, we have set out a matter in relation to the payroll, because this is the second audit year where we have been impacted as an audit team by delays in the provision of payroll information, and therefore we've made a recommendation that that area should be looked at so we can have full and detailed supporting information in a timely manner for our 2021-22 audit. And again, Stephen commented on that. And just for completeness, we have received one objection to the 2021 financial statements. We have yet to determine whether it is a valid objection, given the previous objections on previous year's accounts need to be concluded and considered before this one can be. Hopefully that's provided you with a good level of assurance as a committee, but I'm happy to take questions alongside Stephen on the detail of our report and anything that I have said.
Thanks very much, Tom, Stephen and Mark. Very comprehensive description. Just before I come to Chris, the $64,000 question, when will it all end? When will you have completed your assessment and the dealing with the objections and the value for money assessment and all the other things which you mentioned, which are still outstanding? And then I've got one or two other questions, as I'm sure Chris has. So I think we need, is this a test, Dawn? I thought there were no tests. Ladies and gentlemen, that was apparently a test, even though we were told there were no tests. So for people watching at home, we will be continuing, and over to Mark to answer my questions, and I'll open it up.
So I think I'll give you an answer in 3 stages, and I'll break it down, and some of it will be an audit answer as well. So clearly, the first priority, I think, is to sign or get to a position where we can sign the 2021 audit opinion on the financial statements. Which we will do as quickly as we can. But clearly the considerations around the city deal are complex. It is a very significant judgmental area, and we need to come as a firm to the right answer. So we won't sign until we are ready to do so. But I don't think that is a long time period away. And the rest of the outstanding procedures that are in the report that I've talked around, I don't think take a significant amount of time to complete. So I think we're in a good position, and that's not far away, though I would not be happy to give you an ultimate date, Graham, of when that would be. Soon as possible would be my audit answer to that. My second answer or element will be value for money conclusion, because the predecessor auditor as the predecessor auditor has now concluded 16-17, we are underway with our work in relation to the intervening periods of time under the old National Audit Office requirements. So again, we'll get to sign those off as quickly as we can, alongside the objections that are live for each of those, because they are all interlinked. And then that will be in the position for us to then conclude or consider and conclude on the objection for this financial year.
Okay, ladies and gentlemen, we'll adjourn the meeting for 5 or 10 minutes while we check what's happening to this fire alarm test. Okay, thank you very much, folks. We are back live on YouTube or whatever it is we're streaming live on. Chris, would you like to ask your questions, and then Simone and perhaps Tom will respond?
Thank you, Chair. I have two questions, one about the audit differences and one about the city deal. Is it okay for me to ask both at this time? Okay. First of all, on the audit differences, which we see on page 4, I fully appreciate that, first of all of the audit differences which are shown here are below the level of materiality. So I fully accept that to start off with. What concerns me is the lack of consistency in dealing with these audit differences. In the case of the larger ones, we are told, in fact, in the case of the majority of these audit differences, we're told that the reason there's an audit difference is that further information came to light from various sources after the draft statement of accounts was produced. And I can understand why, especially for immaterial matters, it would be decided it's just not worth all the time and trouble to change the draft statement of accounts for an immaterial adjustment which has emerged after the statement of accounts have been produced, draft statement of accounts have been produced. So I can accept that as logic, but that's not what happened. What has happened is that some of these post-draft statement of account adjustments have been included and some haven't. And what worries me, Chair, is the lack of consistency here. Reducing the pension liability by £7.5 million because information was provided by the actuary after the draft statement of accounts had been prepared is fine, and I welcome the fact that we're getting it right. But then why do we not also adjust for the balance sheet being overstated by £2.169 million on the property side, because the council's external valuer provided updated valuations after the draft statement of accounts have been prepared? So why would management choose to only adjust some of these and not others? And it's not even all of the larger ones which have been adjusted either. So I'm puzzled about the lack of consistency here and a little bit worried.
Just ask your other question about the city deal, and then we'll cover them both. So I might invite Stephen or Tom to answer first, and then ask Mark whether he is comfortable with the answer.
Thank you. Okay. On the city deal, we've all seen allegations which have been made about the accounting treatment, and a lot of information has been very helpfully provided in these papers, I have to say. The first two things I'd like to say are, I think it's outrageous that allegations are being made about fraud and about going concern. To my mind, and I've looked at it extremely carefully, there is no justification whatsoever for suggesting that fraud has been involved here. None whatsoever. There may be a difference of professional opinion. There may even have been something which has been incorrect in the accounts. But the idea of fraud, that there's been deliberate decision made to do something which is known to be wrong, is outrageous in my opinion. And I think it is worth putting that on the record. The second thing which has been stated, which I really don't accept and needs to be shot down in flames, is the idea that this has been done in order to bolster the calculation of whether the county councillors are going concern. Absolute and utter nonsense, because if anyone understands this, it's going to be the auditors, who themselves are the ones who will give an opinion about it being a going concern situation. So whilst for many of the rest of us, some of this might be somewhat opaque, if not totally dark, for the auditors, there's no way in the world in which this accounting treatment will in any way affect their concept of going concern or not. So I think those two things really need to be publicly put to bed, because they're outrageous comments. Having said all of that, I'm not convinced about the correct treatment of the city deal monies, and I'll explain why. It is a matter of professional judgment about whether the requirements of International Accounting Standards 20 have been satisfied in this area. I fully accept that's a matter of professional judgment. I'm not going to say which way that judgment should go. I'm a little bit concerned that the monies involved would, in the examples which were given, the monies for the future years would go into usable reserves, which seems very strange at a balance sheet date to say they are usable reserves when they're not usable at that balance sheet date. But that's a matter of detail, which I would appreciate for the auditors to give consideration to. What does concern me is that even if the professional judgment is correct and IAS 20 applies in the way in which is being suggested, I would wonder whether, to give a true and fair view of the accounts of the county council as at the year-end date, if it is correct to do this, because it gives such a misleading impression to the public and to some other users of the accounts. And I just wonder whether, even if the professional judgment is correct, which is being suggested, whether there should be an override here in terms of having something which is usable to the users of the accounts. And just because IAS 20 says you could do something or even should do something, doesn't mean to say you have to do something. And I would ask the auditors to give consideration as to whether the accounting treatment which is currently being produced gives a really appropriate view of the accounts to those who utilize them and look at them. Now, you could give other examples to show that it's really difficult. Let's say, for the sake of argument, Chair, that your allowance for being chair here is, let's say, for the sake of argument, to make my numbers easy, £5,000 a year. You wouldn't say, oh, well, this year I've got £20,000 because I'm in for 4 years, you know. So I've got £20,000 here. The council owes me £15,000 at the end of the year, but I've got 5,000 this year. You wouldn't say that. It doesn't make sense. Now, the situation isn't entirely analogous, but what which is closer to being analogous is the situation in the combined authority. And in the combined authority, we've got some £600 million, which has been promised us, or was promised to us a few years ago by central government in tranches over, again, the right way around, 20 million over 30 years. I think we've got it the right way around. It would have been outrageous for that 600 million or 580 million of it to have been put in as a debtor at the end of year one and to take the whole 600 million pounds into the income and expenditure account in the first year. And when I talk about the numbers looking strange and being very difficult for people to understand, I'm looking more at the income and expenditure account than I am at the balance sheet. Because in the income and expenditure account, you have 1 year when there's an enormous splodge of money, which, if I may use the technical term, enormous splodge of money, which suddenly comes in all at once, massively distorting the income and expenditure account. And then in the future years, the income which is coming in those years relating to the city deal isn't reported at all in the income and expenditure account. So it just doesn't seem to me to provide the information in the form which reasonable users of the accounts could expect. And that's why I'm asking the question, could it be considered that there should be some override of IAS 20, even if it is the auditor's opinion that IAS 20 applies in the way in which has been suggested? Maybe an override may be a sensible and appropriate thing to do. Thank you, Chair.
Thanks very much, Chris. So Tom or Stephen, do you want to pick up the uncorrected differences first, and then you have already proposed a mechanism for dealing with the city deal, so I'll pass on to Mark as to whether he thinks that's an appropriate mechanism or not.
Yeah. So on the unadjusted and adjusted audit differences and the potential inconsistency, in terms of the two uncorrected differences, and my colleague Ellie may have slightly more detail on the property, plant and equipment one, but I understand we've got through the quality assurance process that's come out in looking at the valuers reports, there were some concerns that the information provided after the accounting date was not quite correct, and so we decided to sort of provide do it on an indexation basis rather than using the updated valuations. And in terms of the insurance provision, it is quite relatively in terms of those differences relatively small, and so in that case the decision was made or to propose not to adjust in the same way as we have for, say, the pension liability, which is considerably higher. I don't know if that was a correct analysis of the PPE situation, Ellie.
Yeah, just to add a little bit to that. So basically, we receive the valuations from the external valuers. We undergo a quality assurance process on those valuations to ensure that we're happy with them. As part of that process, we identified that there were some that we weren't happy with, and there were a handful where the external valuers weren't able to come back to us in time with answers to our queries. So rather than include potentially incorrect valuations, we decided to index, for those handful of assets, we decided to index the values that we already had and use that basis instead. Subsequently, obviously, EY have reviewed that, and so the 2.2 million difference there is the difference between what we carried in the fixed asset register and what the valuer said, but we weren't sure about those valuations. So that's why we're not adjusting for them, because we haven't got that underlying assurance that those valuations were actually correct. So what we are going to do instead is to revalue them properly again next year, or this year they already have been revalued, and make sure that the underlying assumptions are correct. So that's why it's not been adjusted.
And I think Mark said that in the previous years, there'd been a 300 million or something amendment anyway. So 2 million compared with that previous adjustment is relatively small, although it feels like a lot of money. Mark, what's your view about management proposing not to correct these, but to include a rationale?
I think that is the place for management, and it's management's view. Our responsibility are to report all audit differences, to put them to management, and for management to decide whether they wish to adjust for them or not. Our ultimate conclusion would therefore be whether the unadjusted differences impact our materiality level and therefore our true and fair view. So I can't comment on why management would choose to do one or the other. That is clearly for them and for you as a committee to agree with management. All I can do is set out the full quantum of the differences and the different categories within which they lie.
Well, you know what I'm going to say. Using your professional judgment, if you were management, would you expect it to be adjusted or not?
I am not uncomfortable with the approach that management have taken to date and their rationale for why or why they have not adjusted for, albeit they are the same category of difference, i.e. it comes from a late report, but treated in a different way.
Okay, and we have got the undertaking that the officers are going to properly review PPE next year, so this will be picked up next year, without doubt. And then the comment about the city deal and how that grant is being handled.
I think Councillor Bowden makes some very good observations, which are pretty much in line with the questions and thought processes that we are going through. International Accounting Standard 20 is very clear on grant accounting, but then the SIPFA code adapts that. And it is the difference between the two and the adaptations that is the grey area where judgment falls. And I think the easy answer would be just to have agreed with management's approach, but clearly as auditors, we are being professionally sceptical and going through the full fact pattern behind the grant, the conditions that it has, whether those have been met or not, whether IS 20 applies in full or whether the SIPFA code does apply to various elements of it, and therefore which line through all of that you take to get to a conclusion. And that is the deliberations that I was referring to earlier that we have not yet concluded on, but it will take into account all of those areas and considerations to get to the position that we think is right for that grant. So that is fact pattern, that is a true and fair view, that is substance over form, and that is professional skepticism about what the accounts look like to a lay reader, which is ultimately what our audit opinion is for.
Thank you. I take what Chris has said, because if I was a layman looking at something and there was an implication that I was definitely going to get hundreds of millions of pounds, when in fact there is no guarantee that I'm going to get that money because I've got to get through various hoops and conditions and the like, it would seem odd to include that definitely in the accounts. And whilst you can say there is an expectation that I will get this money, to actually include it in the accounts does seem slightly risky. And picking up Chris's analogy, there is no guarantee that I'm going to be audit accounts chair for the next 4 years. And I could just as easily get kicked out next week. Well, so it would be entirely inappropriate for me to say, I'm getting this allowance of 5,000 a year, so I can guarantee I'm going to get another 15,000. So picking up on that, do we not need to ensure that we are describing what the conditions are associated with this grant, that it's not something we have already received and we will be receiving it?
So I think Tom and Stephen's paper does go through the conditions, and they have indeed sought legal opinion about the recoverability of the future debtor as is, and therefore the remaining elements of the money. And that does form part of the judgment in applying the accounting standard, and they are inextricably linked. But there is an element of judgment made by management within that to get to the conclusion and therefore the accounting treatment they have received. I would add that there is always, it's always better to over disclose around a note about a judgment made and critical judgments applied in any note or supporting information within the relevant section of the accounts. And maybe that could be enhanced if the accounting treatment as is the right one that is determined. There's no harm in over disclosing to say what has happened narratively as opposed to numerically. But I think we need to get to the outcome of what we as a firm think is the correct accounting treatment and then go from there as the next step.
Okay, thank you. Let me let Tom come in and then we'll move on to Simone's questions.
Thanks. Well, I would just welcome all of the comments that have been made on this so far. I think we're at a particular point in the cycle with the city deal where it's at its most material level. So it's really important we get it right at this point. As has already been said, we've taken an additional expert views to ensure that I've got the kind of full range of information available to me in submitting that judgment to EY, and we'll work through with EY what the upshot of that is. And it did just the other thing I would add, we've touched on some of the specifics. This is very much about accounting for grants and looking in some of the detail we've disclosed in the paper. It's not necessarily about a guarantee, but it's about reasonable assurance and legitimate expectations where it kind of flows down from that. But it is a complex area, and that's why we set out the alternative accounting entries as well, because it may be that we conclude an alternative treatment. I think the other thing I'd just draw out, which is in the paper, is it doesn't have an impact on going concern, in my view, as Councillor Bowden has already said, or on our financial sustainability, resilience, the adequacy of reserves that we would actually access for council services. But we're, as has been said, looking at it very closely so that we get an accounting treatment that can hold both for this year and for the remaining 7-8 years of the city deal.
My apologies, I just asked one specific question, which I really appreciate an answer to. I've got no doubt at all that between our officers and the auditors, a thorough examination will take place as to the appropriate way in which this particular matter should be accounted for in accordance with both or either IAS 20 or the CIPRA code. But no doubt you professionally do that and you use your professional judgment to come to a conclusion. My question was whether it would be appropriate for you to consider going against that conclusion on the grounds that for the users of the accounts, it will actually make more sense to decide to not to show the whole amount at once, but to do so on an annual basis so that it actually fits in with what people would understand. The idea that in the example which has been given, there's £160 million which is owed to us by government at the end of year one is well, it's technically not true because it wasn't owed at the year end. And we've already talked about the misstatements both in year one, which are very substantial, and in all the subsequent years, which are still material but less substantial in the income and expenditure account. And if we are to consider the needs of the users of the accounts, could that be considered as an overriding matter, which could override what might be decided to be the technically correct way of accounting? And then you'd have to disclose that you haven't complied with, for example, the CIPFA code, and to explain why you haven't.
That is a consideration for sure. As auditors, clearly we don't like to depart from international standards because they are there for a reason to ensure consistency. But the true and fair audit opinion relates to the reader of the account. So that consideration would be part of what we need to do ultimately.
Alan. related to the city deal? Because I know Simone is moving on to something.
Yeah, sorry, I've
different.
got 2 points. I'll do the city deal, and I'll come in after Simone for the other one. Yeah, I mean, I don't want to go over what Councillor Bowden has said, but looking at it from the reader of the accounts, I think it's this, from my point of view, there is no way that it impacts ongoing concern. There's no element of fraud. So I think, those personally can be discounted. Although that's obviously ultimately for EY to make that judgment. But I think from where I'm coming, it's the reader of the accounts, the distortion of year on year, the assets which are in long-term debtors, and then and the income would be where I seems to make it more difficult for the reader of the accounts to see the movements. But so I won't go over. I agree with most of what Councillor Bowden has said. But
thank you, Nick. I'm trying to get onto the Simone. Is it related to the city deal?
It's related to the city deal, just to say that given the enormous amount of mischief that this issue has generated over what is a completely technical accounting issue, there would seem to be some benefit in being pragmatic about this situation. We have looking at the things that I've received, we have individuals who are making complaints of, if not criminal, misconduct to the National Audit Office, and are floating ridiculous conspiracy theories. And we really need to be pragmatic and pull the rug from under his feet. It's really intolerable, the way that he's behaved towards officers, and we need to draw a line under this as quickly as possible.
Okay, thank you, Nick. Simone.
Thank you, Chair. I just want to touch on value for money again. As a relatively still new member of Audit and Accounts, I just want to understand why the value for money, it goes back to sort of 2018, where the problem is to get this audited, and also how exposed is the council, I don't know if that's really a correct word, but how open are we for not having the value for money audit, what to be scrutinised for nearly sort of 3 or 4 years?
Thank you. So just to give a bit of an update on that then. So at the November meeting of this committee, we received from BDO, our previous auditor, their detailed considerations on procurement issues in particular, which were the ones stemming actually from an objection, and then they did further work, and then they reported back to us with those recommendations. Subsequent to that meeting in November, we then received the signed value for money conclusions for that year. Myself and the former chief executive met with BDO in the middle of December to kind of formally receive that report. We've now published it. So there's been that step forward with the value for money conclusion for that year. And this committee will get an update on the progress with the procurement recommendations in later this year, I think at the next meeting actually. What isn't concluded from 17-18 as yet, and we are regularly prompting BDO to finish this work, is the determination of that objection. So there's a formal document, I think, that has to go to the objector rather than the council, that just concludes on the other matters, and procurement was only one of them in relation to that year. And then it will flow on from that once there's the opinion and the determination of matters, because a number of the matters are raised again and again each year, the auditor understandably, and it becomes EY, I think, after this final 17-18 work. It's kind of sequential really that they need to consider those matters. And then I would just say that it isn't desirable that we haven't got a value for money opinion, and it is something that we need to rectify. So that's why we're prompting BDO regularly and constructively engaging with the auditors to put that right.
Thank you for that explanation. Is it okay, Chair, if I touch on I think it's within the, let me have a look, the statement of accounts. It's in the narrative area of it. They touched on, because we obviously have got the serious pressures with the growing within SEND, special educational needs, and disability, and the high block need of the designated school grant. Within our CYP meeting, Jonathan Lewis, Service Director of Education, has shared with the committee that the government, the DfE, are inviting us to take part in the safety vow. Obviously, this happened since after the audit, so I thought it was good knowledge within this committee that, you know, we understood that hopefully we will get some kind of intervention program going through the DfE on this. Thank you.
That's very helpful. Thank you. Any final comments on this? No. So we are asked to.
Question, which and it's just touching on, it's page 34. It's about the comments about issues in getting information for payroll testing and other areas. And as EY say, it did have led to delays. Is that now, obviously payroll within the county council is a big area. Is that now being addressed or being addressed?
So I think we've got, I'll happily be corrected by others, but I think we've got to a place where we have the information we need for the completion of this audit. I think performance concerns about payroll and how we're best placed to respond to next year's audit are still very live. So the payroll team is a shared service across 4 councils. It's hosted in West Northamptonshire Council, and it's governed through the lead authority board, which I sit on with my counterparts, and it is the service we're most concerned about. I think it's fair to say from a performance perspective. So it's being closely looked at. I think it's an area that needs additional resource, and we're supporting West Northamptonshire to look at that. So yes, I have to acknowledge really that it is an area of concern, and in some ways actually having the recommendation from external audit is a helpful kind of strength to our elbow in making that case.
Thanks, Alan. Neil, I seem to recall payroll was one of the areas that internal audit were trying to look at, but not that successfully. Do you want to add any comments?
Yes, certainly. As part of our annual assurance, we rely upon West Northants to do an internal audit review of the payroll service. We haven't got that report yet. We're hoping to get that by certainly the end of April, where I should be able to give you more of an update. There were some earlier concerns about I think it was the control accounts not being completed as regularly as they could be. But until I've got the report through, I can't really give you the detail on that, unfortunately, Chair.
But hopefully that work plus the additional information that EY have asked for will help to ensure that we don't have this comment next year. Yeah. Okay. Any other comments, questions? So we're asked to note this report and review and comment on the revised statement of accounts. Note the external auditor's audit results report, the draft audit results report. Approve the decision to not adjust the statement of accounts in relation to the 2 items highlighted in section 2.6, which we've discussed, and then to delegate to the Chief Finance Officer, Tom, and me as chair of this committee to sign the final statement of accounts and to make any related declarations taking account of the adjustments agreed with the external auditor. Are we all comfortable with that? Yep. And I will make sure that we report back next time on what we have done differently if we have changed anything. All right. Thank you very much. Let's move on to the next item then, which is item 6, internal audit progress report. Mark and Safa, you're welcome to stay if you want. It's always interesting for you to hear what Neil and colleagues have been up to. So I hope you will stick around. Neil, over to you.
Thanks, Chair. So just to recap for a committee, this is a suite of reports that report on the main areas of audit coverage for the period to 18th February 2022. The committee is requested to review, comment on and approve the proposed plan of internal audit work for 22-23 outlined at section 6 of the report. Before I ask my colleague Murray to go through the Appendix A, which is the detailed report, just 3 or 4 things I'd like to bring to your attention, and that's an Annex D to the report. In line with the public sector internal audit standards, the committee is requested to review, comment on and approve the updated internal audit charter. Also, I've been tasked by committee to bring back a highways audit update to each meeting. The actual audit work on the highways open book review was paused in early December, at which point we had got to propose final position to March 2020. That had been agreed with a contractor, subject to 1 query referred to the highway service for their consideration and final approval. In addition, the contractor has submitted their first final account to March 2021, and the highway service has come back and confirmed that they're happy with that. So we're now just awaiting the open book review that will commence for the period 1st of April 2020 to 31st of March 2021. So there's been some positive progress, but we were hoping to be completed by now, really. But it is ongoing. Also, risk management. Just an update on risk management. CLT held a meeting in very late January, early February to discuss the corporate risk register. At that meeting, after considering the corporate priorities of the council, CLT agreed that in general, the current risk register remains accurate. But there were some changes, and I'll just go through the sort of brief changes. And that's the existing single risk around safeguarding to be will be split into 2, into adult safeguarding and children's safeguarding. That hopefully will facilitate assurance across these 2 key areas and in places discrete areas. The risk around budgets will be reworded to reflect both short and medium term assurance required. The risk around serious incidents occurring removes specific reference to COVID-19, as that was probably always considered to be a trigger. An additional risk specifically addressing cybercrime was added to the register, and the specific risk around this land was removed and replaced by a more strategic risk around key partnerships and contracts. And it's likely, but not certain, that this land would be reflected as a trigger under that new risk. The outcome of the meeting was that colleagues in the risk management team will be meeting with risk owners of CCLT over the next few weeks to get the granularity of the risk register bang up to date, and then it will come to this next meeting and we'll go through the normal processes thereafter. I am disappointed not to bring it to this meeting. That's down to resource issues within the team. Our risk manager left in December. We haven't yet managed to replace her, but we are actively trying to recruit as we speak. If you've got any questions about the introduction, then I'll take those now.
Any comments, Chris?
If we're just talking about the report rather than the annexes, then on the report itself, in I think it's paragraph 5.3, mention is made of the proactive counter fraud work. It's something which I started pushing for some 2 years ago. And I'm pleased to say that I think I might have been partially responsible for our previous Section 151 officer changing his mind on this particular subject in County Council. And mention is made that there is a joint project with the districts, which is now underway, and that a report will come to this committee in the first quarter of next financial year. When that report comes, may I request that it does at least the following couple of things. The first is to show what the cost is to the county council of the new joint project, and what the anticipated returns to the county council are likely to be as a result of that work. And the second is to consider whether there are still marginal gains to be had by expanding that work. Thank you, Chair.
Okay, thank you. Neil, do you want to comment?
I will defer. I mean, the answer is yes, we will do that, but I'll defer any other answers to that, because I'm going to hopefully ask Mairead to canter through the actual appendix, the progress report, and I'm sure she will pick up the work on counter fraud as part of that narrative. So over to Mairead.
Mairead, do you want to literally canter through?
Yep, it's rather a long report, so I'll just draw your attention to a few sort of key aspects of the report. So section 3 is our usual update on finalised audit reports and reports that have reached draft report stage. 2 of those received a limited opinion, fees and charges, and declarations of interest for employees. And so as usual, we've provided summaries of the findings and recommendations on those 2 reports at section 4. Section 6, as Neil touched on, is the draft audit forward plan for the next 4 quarters. Now we bring that to Audit and Accounts Committee at every committee meeting, but as this is our final meeting before the new financial year, we've given a little bit more detail this time on the internal audit planning process that we go through, as well as an analysis of how the draft plan provides assurance over different key areas of risk within the council, and that's section 6, table 3. Section 7 is follow-ups of recommended actions. So where internal audit has agreed with management action that's going to be undertaken as part of a report, we follow up on these at set intervals. Currently, we do have 65 management actions which are outstanding for implementation, which is quite high. The majority of those are in place and economy, and they relate to the capital programme work that was undertaken by internal audit last year, which did have a large number of recommendations. And then a number of those also relate to an investigation, which I will mention in a moment. There are also a fair few recommendations in resources. Those are largely to do with reviews of debt recovery and accounts receivable. And those will be picked up as part of internal audit's review of key financial systems, which are underway at the moment. Section 9 is our update on fraud and whistleblowing investigations, including numbers of open and closed investigations. Probably the key thing in this section to note is at section 9.4, where we give a summary of an investigation into an allegation of timesheet fraud committed by an interim worker, where it was identified that an individual who was working full-time as an interim for us was also working full-time as an interim at another local authority. The monitoring officer has concluded there's no contractual basis to withhold payment to the interim worker, and it's not likely to be possible to pursue this as a criminal fraud. But we have agreed that a referral will be made to the ethics board of the individual's professional institute, and internal audit has made a number of recommendations to improve control, both within the service that was affected and more generally across the council. HR have already implemented all the recommended actions that we agreed with those to update and strengthen our agency worker and interims policy. And the highway service actions are largely still outstanding on that, but you can find the detail on all the outstanding actions in Annex B, which has the full detail of all follow-ups. Then we've got section 10 is an update on progress with key financial systems audits. Treasury management audit has already been completed. We are at fieldwork stage for accounts payable, accounts receivable, and debt recovery. And as Neil mentioned earlier, payroll and pensions are delivered for us by West Northamptonshire Council as the systems are shared. I will just come back to Councillor Bowden's question around the Council Tax Fraud Initiative project. Actually, the intent to bring back a report for next time was around a redraft of our anti-fraud and corruption policy, and not a report specifically on the CTFI project. But I am happy to take that away as an action and contact the individuals who are involved in running that project about bringing a proper update on that to you.
Thanks very much, Mairead. I've got Chris, and I've got some questions as well.
Yes, thank you, Chair. I'd just like members to look, if they haven't already done so, at Annex B, because I went to this, and to be quite honest, I was surprised, given the things often don't go according to plan, and you have difficulties when you've got staffing issues and so on. I fully understand all of that. But the sheer number of outstanding recommendations, and I appreciate this was at the 18th of February and things will have moved on, but the sheer number of outstanding recommendations which have missed their target date, sometimes they've missed their target date by many, many months, and now have another revised target date in place, or in one case haven't even got a revised target date in place. It does worry me. And I've actually lost track of this, because I don't know how many of these original target dates are themselves revised target dates for previous target dates which weren't missed. And I'm beginning to get worried. Now, I'd like not to be worried. I'd like to get some assurance. But rather than my having to go back report after report after report, I'm interested to know how many of these are repeat offenders, so to speak, where revised target dates themselves have failed to be met, and we're being given a further revised target date, and the extent to which A, we're in control of this situation as an authority, and B, the direction of travel that we're going in. Are we getting more problems or fewer problems?
I think that's a very good point. My interpretation of Annex B was the target date was the original target date, and the revised target date is whatever it is now revised to. But either way, I think it would be useful to understand a bit more about why things have been delayed. In some instances, there is a bit of an explanation provided, but not always, as far as I could see. Am I interpreting that correctly, or would you like to add any further comments, Neil or Mairead?
That's my interpretation as well. So I'm fairly sure that that's facts. That is the intention. We show the original target date as target date, and that will always remain the same. And then we put revised target date to give you a feeling for the passing of time between the recommendation and action. I think Mairead has outlined that this is unusually high. For a number of reasons. I think, Chair, you've already agreed that the Exec Director of P&E will come to this next committee to discuss the implementation of the recommendations regarding the sort of the contract management work. And that's, I think, 26 of the recommendations. So it'll be very unfair to say that those recommendations are not already in, but what we're saying is we haven't got assurance yet that they're in and being routinely complied with. And as I understand it, the exec director is coming to this meeting, or at least sending a report to this meeting to give an assurance on those 26 recommendations being implemented, or the extent to which they've been implemented. But I do know that many of them have already been picked up, and that there's been good progress made in governance. And also the additional number of recommendations coming out of the interim consultant who was paid twice has also greatly inflated the number of recommendations outstanding. In terms of your question, should we be worried? We take this to CLT every 3 months. Prior to this meeting, CLT members are aware of the risk that they're exposing themselves to in terms of recommendations not implemented. From our perspective, we probably had concerns about some of the, I think it's just one IT essential recommendation, but I think that was we hadn't got the PSN certificate in place, but I understand that is just about done. That was delayed because of the data centre being moved. In terms of recommendations that really concern us in terms of an annual opinion, in there, you know, the number is higher than normal, but at the moment, I would expect those to be closed off before we get to the final annual opinion stage. So I'm not saying I'm not concerned or I'm more concerned, but I'm probably trying to give an assurance to the committee that they are being addressed actively by CLT and that they are being taken seriously. But hopefully when we come in, it'll be May, I guess, that will be down to the sort of normal numbers. The other way to look at the recommendations is that if it's those within 3 months, then that's less worrying than it is, as you quite rightly say, if it's a year, depending on the materiality of the recommendation. And that's why we were concerned about the PSN recommendation, because that was essential. Many of the others we just call important. So they're still important, but they're not critical to the governance of the organisation. So that's a bit of a long-winded answer. I'm sorry, but I hopefully picked up my points.
No, that's good. And you might do better if you pull your mic down so that we can hear you, but also people online can hear you more clearly as well. Tom, because I noticed you pulled your mic down. Does that mean you wanted to say something, or if not, I'll pass it back to Chris?
Well, I will just say briefly, I can confirm on behalf of CLT that we do receive this report and it is taken seriously. And I think there are more recommendations than it's comfortable to have at the moment. In some ways, that's a good reflection on internal audit, kind of making these recommendations and following them up. And as Neil has said, a number relate to 2 or 3 specific areas which the committee will receive an update on. But I take the more general point back from the committee, and I'll convey that back to CLT colleagues in particular, so that we can present a more favourable picture next time.
Okay, Chris.
Thank you. I'd like to put Neil's mind at rest. I have no objection whatsoever to being given further information, so I don't mind if you're going on for a little bit of time, because you're giving us the information that we as a committee need to understand what we're presented with. So please don't shorten your answers when it's necessary to give us information. I have to say, I thought that Tom was being slightly disingenuous, saying this is a good sign that internal audit's working. We've got such a large number of items which are outstanding, but I'm sure he didn't mean it quite in the way in which it came across. One request I've got is that in future iterations of this report, would it be possible for you to put the ones with risk E above at the top of the list rather than just in the order that they've got? Because I hadn't realized until I skimmed through that there was an E in there, and there is, but it's a few pages down. So if they could be put at the top of the list and maybe even highlighted so that it can be easily recognized by members of the committee that there are some issues which are significantly more important than the general, quote, run-of-the-mill, unquote, risks.
We will look at that. I seem to, I'm fairly confident in saying that in the narrative, in the report itself, we do advise on all essential recommendations and the progress. In the narrative, I believe it's there. However, we will make absolutely sure it is going forward, and draw it to your attention.
Okay, thank you. If I can raise a few comments, and then we'll see whether others have got things to say as well. I think, Tom, you've already covered this, but there is a point somewhere about the internal audit flexible plan is going to CLT. So I just want to confirm that that has been signed off. Secondly, you refer to a core audit of things that are audited every year. And I just wonder whether on a risk-based way, there are some things which don't have to be done every year, but should be done every couple of years. In order to give you more time to be flexible and do different things. The next point about risk management, I'm pleased that CLT have looked at it, but I think we would like to see every time the top risks and anything that is read in directorate risk so that we can see what is being dealt with. And then you asked us to look particularly at the internal audit charter. And on page 415 of our pack, of 446, just to emphasize to people watching how many pages we had to wade through this time. It talks about the audit committee's role, and I would like us to confirm that we are comfortable that the description here of what the audit committee will do, and then with more information provided on page 434, that it is comprehensive and it is okay with what you were anticipating. So can I pass over to Tom for some of the earlier, or Neil for some of my earlier comments, and then generally, are we comfortable with our role as described in this internal audit charter?
Okay, I'll take the first question, which I think was the flexible audit versus the core audit. And you're absolutely right. Every year we look at the things that we consider core audit, and core audit are those things that we would have to do in order to give an evidence-based assurance at year end. I hesitate to call it minimum audit because it isn't, but it's the absolute, it is the minimum really that I would expect to see in terms of audit coverage across the organisation, to give some form of evidence-based opinion on the overall governance, as I'm tasked to do annually. But we do without a doubt look at that type of core audit. So taking an easy example, if payroll was substantial this year and substantial last year, then we may take a view, you know what, actually, we will just do a little bit of compliance testing as opposed to doing a full audit of it every single year. However, you may decide as committee, or CLT may decide that's too big a risk to take. I probably, if we were getting substantial assurance in every single key financial area, I wouldn't be looking to do the full system-based, risk-based audit. I'd be looking to do key control testing and compliance testing. Going forward, I think as we've emerged out of the LGSS direction, Cambridge has got more ability to start to challenge some of the work that it does in those core areas, and indeed the move towards core and flexible is an example of that migration away from a fixed audit plan. So in answer to your question, yes, we would. What I would do respectfully is to invite members of this group, this committee, to give their opinion as to where they feel possibly you wouldn't need annual assurance in those areas, and we can then look at that, talk that through amongst ourselves, take it to CLT for their opinion, and then come back with that in May, because as you know, every quarter you get a revised plan, so it's a dynamic, evolving plan which reflects, I think, the current environment of ever increasing changing risks facing the organisation. So yeah, the answer again is yes. If you can let us know where you're challenging it, then that would be great for us, because you have a different set of consultations and groups that would give us a more diverse understanding of where the risks are facing the organisation.
Thank you. Well, we need to give that some further thought. And then my other comments about having the risk register next time you're comfortable with producing that, because CRT will have completely reviewed it.
Absolutely, yeah. I as I say, I'm disappointed I haven't brought it here today. I was hoping to, but just resources just haven't permitted it. But it will absolutely be here for the next meeting. I think it will need to go to other committees as well.
And then page 415, folks, about the role of the audit committee. When I first read this, I thought it was very passive, and there was a lot of, you can approve but don't direct, you can consider, you can be informed of, and we didn't seem to do very much. But when you then get to page 434, there's rather, if I can find it, there is rather more detail about what the audit committee is expected to do. which I felt was much more helpful about providing independent assurance and providing independent scrutiny and overseeing the financial progress and reviewing matters and enhancing and promoting the profile and contributing towards and reviewing things and considering things, which seemed to be much more active. So if folk are happy that the description on page 434 of our functions is closer to what we think we do and should do, then let's go with that. And I see sort of some vague nods around the table, so I think we'll assume that that's okay. Mac, did you want to say something?
Apologies to you, Chair, but you keep referring to these 400 odd page number type things, whereas when I've got my presentation in front of me, I don't have those numbers. So I'm looking down, trying to look down the agenda and follow which agenda item you're actually referring to rather than the page number. So I don't have 400 odd pages, I have.
Okay, well, I think I'm on Annex G, terms of reference of Annex G of the is it the internal audit charter, which has got in section 7 audit and accounts committee, and it talks about the membership and the summary of functions. Well, others found it, got it, happy with it.
So I think it's under Appendix F on mine, if that helps.
Is it? Well, have you got page numbers at the bottom of your pages, Mac?
If you look, Chairman, I'm looking at the papers that presented to us for the lead.
Right, what I'm referring to is the whole of the audit and accounts committee documents which you can download as one complete thing near the top.
Okay. Yeah, now I can see what you're looking at. Wasn't using that.
Yeah, page 434 of 446 of the whole document. It does, yeah. Okay, well, I think I was just trying to draw it to people's attention because we should already be aware of it, but it seemed a comprehensive description of what we are aiming to do as Audit and Accounts Committee. Right, go on, Simone.
I think the only thing, going back to Appendix D, as you said, we're always being told to approve but not direct. Internal audit's annual plan of work, but if we as a committee felt something needed to be looked at, we would be allowed to say to internal audit, please could you look at this area? We're not directing you, but we have a concern in this area, please could you look at it?
I think we should be able to, and I think Neil is happy for us to do so, and the discussion we had earlier about what do we mean by core audit and have a debate about the extent to which certain key systems are examined in full or just in outline is a good example of it. But do you want to, Neil, do you want to add anything
just
more?
going to confirm that really, yes, Chair. I mean, obviously the reason why you don't direct or approve is because you're one of many stakeholders who would influence the audit plan. So in order to retain that organisational independence that the audit needs to have, then we obviously just take advice from rather than get specific approval of. However, it'll probably be a high day and holy day if the audit team didn't take a recommendation to look at a certain area from the audit committee, as long as it was about the organisation and it was material and relevant. Which obviously this audit committee would ensure it would be.
Any other comments on the report? Otherwise, we have noted and commented on it. Everybody happy with that? Yeah, thank you. So we moving on to the Manor Farm update, which is the late report and potentially a confidential appendix, depending on whether you wish to discuss it or not. So item 7 is an update on Manor Farm. I've accepted this report as a late item on the grounds that one, the reason for lateness, to allow the report to contain the most up-to-date information possible, and secondly, reason for urgency, to enable the committee to consider whether to publish further information in light of the recent Constitution and Ethics Committee decision to publish the Code of Conduct report by Wilkin Chapman LLP. Would members please note that this report has a confidential appendix which was forwarded to you separately. The monitoring officer will present this report, and we will at some point need to go into private session to discuss that appendix. So if you want to say anything about the appendix, please hold on in the public session. We'll do that later. Can I ask the monitoring officer, Fiona McMillan, to present this report? Fiona.
Thank you, Chair. I'll start by apologising for the lateness of the written report on this item, which was due to the agenda being published on the same day as the Constitution and Ethics Committee met, and I'm grateful to the Chair for accepting it as a late report. I do not intend to go over the background to this matter, which is set out in the report, save to say that this committee, when it met in July last year, agreed to consider any further publication of the Mazars report on the conclusion of any code of conduct issues, which had been referred to myself as monitoring officer. I brought a report to Constitution and Ethics on the 27th of July last year, and the committee agreed that an investigation into potential breaches of the code of conduct should take place. On Friday, the 25th of February, the Constitution and Ethics Committee considered the investigation report, which this committee have all received a copy of. The committee resolved to place this report into the public domain after applying the public interest test, and made a number of recommendations which are set out at 3.7 of my covering report. So today the committee is asked to consider if the public interest in disclosing the information in the remainder of the 69-page Mazars report outweighs the public interest in maintaining the exemption. I would recommend that the committee resolves to exclude the press and public to enable it to take legal advice on this issue.
Members, does anybody wish to make any comments? If not, we will move into private session. Right, let me read this out. So we resolve that the press and public be excluded from the meeting on the grounds that the agenda contains exempt information under paragraphs 1 and 5 of part 1 of Schedule 12A of the Local Government Act 1972 as amended, and that it would not be in the public interest for this information to be disclosed, information relating to any individual, and information in respect of which a claim to legal professional privilege could be maintained in legal proceedings. Any objections to moving into a private session? No. So as the committee has resolved to move into private session, we will now close the public part of the meeting for the time being and stop the Good afternoon, everybody, and welcome back to the public session of the Audit and Accounts Committee. We've discussed the previous item about potential release of a further report and have decided to have a special meeting to discuss what we do next. So that will happen before District Council PERDA starts on the 28th of March. We move on to the final agenda item, which is the Audit and Accounts Committee agenda plan. Dawn, do you want to introduce this report?
Thank you, Chair. I've got nothing to add other than we will be having an extra meeting, as you've just said, before the 28th of March, and I'll be in contact with members to arrange that.
Thank you. Anybody, any comments, questions? No. Thank you very much. And thank you for your time today. That concludes the meeting. The next routine committee meeting is on the 31st of May, but as Dawn has just said, we will be holding a special meeting before that. Thank you.